Let's go.
Okay, sure. Good afternoon, fund managers, analysts, and bankers, and good morning for those of you in Europe. Welcome to our afternoon CFO chat with Thai Union Group CFO, and thank you for joining us today. Hosting this session will be Ludovic Garnier, our Group CFO.
Hi, everyone.
And myself, Neroli Goldman, or Lena, from the IR team. The session will be approximately 1 hour with around 30 minutes presentation followed by a Q&A. During the presentation, please mute your microphone. When we open for the Q&A, we will ask you to submit your inquiries in the chat box, or you may unmute your microphone. Now, please allow us to begin the presentation. Maybe just a quick recap on our 2021 numbers. So we have continued to deliver growth in profitability over the past few years. And for 2021, we are proud to have delivered record high KPIs. Starting from the sales on the right-hand side, we delivered almost 7% growth year on year at 141 billion Thai baht. This was driven by our strong sales push and also the strong core businesses, particularly the frozen and chilled seafood business and the pet care and value-added business. For the gross profit, we have also been continuing to uplift our gross profit margin. And in 2021, we delivered a gross profit margin of 18.2%, which was the highest level we have ever delivered. For the operating profit and EBITDA, this one we have also continued to deliver solid performance in 2021. What I do want to highlight is our net profit on the left-hand side. This was the first time ever that we delivered over 8 billion baht in net profits, even though we have been, facing with the ongoing supply chain challenges and also the ongoing logistics issues. We have managed these risks quite well and have delivered a very solid performance with net profit growth of 28% year on year. So here's our usual revenue and gross profit development slide. At the bottom, you can see that we have been delivering sales growth over the past 8 quarters, so growing top line. And then, as mentioned earlier, we have been uplifting our gross profit margin from a level of 14 to 15% in 2018 to a level of around 18% in 2021, since 2020 until 2021. And this is driven by our ongoing focus, on cost efficiency management and also, our product mix, focusing on more higher margin products and also automation. Here, for our 3 core businesses. So we have been, as you can see, we have been delivering growth in all 3 businesses over the past 2-3 years, starting from the ambient seafood business. So as you may know, if you remember in 2020, the ambient seafood business saw a strong sales push from the pantry loading during the lockdowns during COVID-19. So we saw a strong sales push there in 2020. And then in 2021, the business normalized in terms of the sales. So the sales normalized, even though we maintained the high margin level. However, if we compare to 2019, the ambient seafood continued to grow quite significantly at around 7%. For the frozen and chilled seafood business, this is the opposite picture. In 2020, the business had been impacted quite significantly by COVID-19 due to the restaurant closures around the world. And because this is, the main sales channel for one of the main sales channels for the frozen business. So as you can see, in 2020, we had been impacted, and then in 2021, we have seen a strong turnaround. If we compare with pre-COVID level, it has also been growing quite significantly. For the pet care business, this has been our rising star, one of our rising stars, and it has been growing 27% since 2019. Apart from the pet care business, we also have the packaging business, which has also been performing quite well over the past few years. So on the right-hand side, you can see that we have been delivering growth for the whole group at, almost 7% from 2020. And then more importantly, on the bottom, you can see that we have been delivering the margin growth from 16% level to 18% last year. This was driven by our business diversification, both in terms of key products and the geography, and also our strong core businesses.
Lina, maybe just let me jump in this one. I think this is a very important picture. I think first of all, the takeaway for you guys is we have been able to deliver some very interesting top line growth over the last 2 years. And the story in 2020 and 2021 was completely different. Okay, 2020, we know the ambient has been pushed with the COVID-19 and has been normalizing in 2021, and the frozen has been hurt in 2020 and has been really growing in 21. And you have seen the pet care value and others has been growing. Honestly, 27% is very impressive for us over the last 2 years. And I think really for me, the takeaway of these last 2 years is we have the right portfolio. And we can manage when there are some issues, and we have a lot of challenges. The COVID-19, of course, was difficult for us to handle in our operations, but overall we have the right portfolio. Sometimes the ambient, sometimes the frozen will be growing, sometimes the ambient will be declining, but then the frozen is able to compensate. But overall we have the right one. And also with the pet care value added and other, I think we have some very nice opportunities for growth. Okay, so it provides a lot of comfort. We are still very ambitious. We want to grow more. You know that very often we say top line growth is not our priority. Of course, we are more interested in bottom lines since 1-2 years already. However, we need to deliver some top line growth also. Okay, so very happy with the development over the last 2 years. Back to you, Lina.
Thank you, Ludo. Here's just a quick update on the COVID-19 exposure around the world. So as some of you may know, we had some production hiccup last year, particularly in Asia, from some factory closures, but we are now, back to normal production, and our pet care business has normalized since Q4. So all plants in Asia and globally are operating at normal production. And in terms of the global vaccine rollout, this is also in advanced progress. In the US, the UK, and Seychelles, and particularly in Thailand, we are, doing the booster dose. So we expect to achieve 80% of employees within the middle of this month. So apart from this, we are also doing, the strict COVID-19 preventive measures in our factories. So this one, it's, that we have been facing with this situation for the past 2 years now. And we have managed it relatively well. So we have managed it quite well. So this is not new for us. And I think we will continue to be able to manage these COVID exposures around the world. I think, over to you, Ludo, for Red Lobster.
Sure, thank you. I think you have here the most important part is the table we have on the bottom left, which is our guidance for 22. And in 2021, Red Lobster has been improving a lot compared to 2020. 2020, it was clearly a bleeding for us. The loss was 1.2 billion baht, if you do remember. Very exceptional year. They had to close a lot of their restaurants in the year for many months, and this is why the loss was so high. In 21, I think we have been really improving a lot the operations, and the loss was at minus 178. The restaurants were open for the vast majority of the year. So I think here it's quite good. The expectation, keep in mind just one thing in 21, we have been benefiting from some incentives provided by the US government for something like 120 million baht in 2021. So if you want to restate or to normalize the 21 numbers, the loss should be around minus 300 million baht in terms of share of loss coming from the operations. You can see here our guidance for 22, we are at minus 400. So we are planning for a deterioration in 22 compared to 21. Why? Because the beginning of the year has been very complicated for Red Lobster. We already shared that during our Q4 earnings release last year. They've been facing with the Omicron variant. They've been facing with very difficult weather conditions. Also in the US, some inflation impacting especially all the seafood products, and also some labor shortage. And you know the market situation of the labor is very complicated in the US right now. So that's why we are planning for 22 a share of loss which would be between 350 to 450 million baht. So here we just do the average between the two, which is at minus 400 million baht. So this is the first line, operations. And then you have the second line, which is lease accounting adjustment, which was a new line since last year. And you know that in Red Lobster, they are applying the US GAAP. We are applying Thai GAAP or IFRS in Thailand. And there is a slight timing issue and a difference between the two. And in fact, we do recognize the expenses quicker in Thai GAAP compared to the US GAAP. So it's only a phasing topic. There is no cash impact. Again, for me, it's a very stupid accounting difference, but it is what it is. The impact in 2021 was 637 million baht. The amount will be decreasing to 422 and will be decreasing year after year. And I think in 2030 we will be at break even. And then after it will become positive after 2030. So overall, the net impact expected for 22 is around 800 million baht. This is our guidance, which is very close to the actual we get from 2021, which is minus 850 million baht. So I told you that, of course, the business was under challenge. We have been launching some initiatives here, and you can see on the bottom, on the top right, all the initiatives we are really insisting on the execution in the restaurants, on the food, the quality, on the value, because this is clearly one of the change provided by the COVID-19. Of course, many people have been losing their job in the US, and now they are really looking for value. And you know that in terms of perception, our product and our offer at Red Lobster is a bit more expensive compared to some other restaurants. So we need to bring and to justify this value on this one. We have been pushing also on the marketing. We have been reinvesting again on this one, switching from the traditional media to the online channel, which are also very interesting, and also insisting on the off-premise business. There is maybe one more point which is important for you, and we just announced this one during the night. I don't know if you had the opportunity to see this one. The CEO of Red Lobster, Kelly, who joined us 8 months ago, just resigned yesterday. So I think it's a new topic, and maybe we can address this one in the Q&A. Very clearly, I think we have been very happy at the beginning of the first few months, but the last 2 months we have not been very happy on the execution and the reaction on how do we react to the Omicron. And very clearly, I think we have some strategic differences, and this is why at the end of the day she decided to resign. So we'll be looking for a new CEO. Right now we have some of our board directors, which are also helpful and who will help during the transition time on this one. We don't have any issue. We believe it can be really well managed. Some new people also join us. We have a new CFO. We have a new marketing ladies. So we have a good team below the CEO who will be there, and we are fully confident that they will be able to face with the challenges we are facing right now. However, the whole restaurant industry right now in the US is facing some issues with the Omicron and blah, blah, blah. So challenging time for Red Lobster, but we are confident that we can turn around the picture in this one in the next months. Next. Here we continue. You know, we have been launching the Space F. So Space F is our incubator and accelerator. We have this year the batch number 3. We are very happy about this one. We have something like a bit less than 20 startups. Half of them will be in the incubator. Half of them will be in the accelerator. This year we have some startups coming from everywhere. You can see here the different countries, but half of them are coming from overseas. We are very happy about this one. I think it shows also that Space F is now well recognized. Of course, we can always do more on this one. Keep in mind that Space F is a cooperation with the NIA and also Mahidol University and also Thai Bev. And you have here in the bottom right the name of the startup. Of course, very different level of maturity that was expected for this for the startup. Some of them are just at the ID. Some of them they have already a proof of concept. Some of them have sales already. So very different level of maturity. And it's always for me very interesting to discuss with the people, because these are very young people in general who are really passionate about what are they doing, and they want really to grow their business. They have an idea which could be nice or good. So you need to assess, do you believe in the idea? How is the team doing? How are the interactions? And then can we scale up? Okay, the question of scaling up a good idea. Sometimes you have some good idea, but it's very difficult to scale up. And very often also, these guys, they will join us in the incubator and in the accelerator, and they will change the ID in between by discussing with us or by the others also. They will change the ID. But very interesting part, batch number 3, and I'm quite confident it will be a good one. On our CVC activities, we don't have new investment to report for the time being. Maybe there will be some new topics in the next months, I'm quite sure. We have one thing to report to you, which is Flying Spark, which was one of our first investment in the CVC. We have decided to build a new protein factory, insect protein factory, both of us in Thailand. So the production is right now ongoing. Again, very happy about this one. We believe there could be some good synergies with our pet care and also with our ambient business in the long term. Next. Just wanted to get back also on our blue financing activities. We have been extremely active during the year 2021. We had a target for 22, which was to move 50% of our net debt to sustainability linked targets. And I think this is already achieved. And what we have seen here, you have the recap of what we have been doing last year, both in Thailand and also in Japan. We've been doing really a lot. And in 22, you can see here, we did secure 2 billion baht short-term loan with Standard Chartered Bank. On this one, very happy again about this development. And thanks to this one, now we have achieved our 50%. And you know that the goal for 2025 is to move to 75% of our net debt having some sustainability linked target on this one. Again, very happy about the output, the oversubscription has been very strong last year, and now we are fully recognized in Thailand and also in Asia as one of the key leader in terms of blue financing, and we will continue. Why do we wait for 25 to move to 75%? I think this year, 22, and the next years, we don't have any significant portion of our net debt having to be refinanced. So that's why the next significant one would be only happening in 2025. And you can see here also on the bottom left some of the recognitions and awards. And I need to tell you, we have really a lot of recognition coming from this one. You know, we were the first one to launch that in Thailand last year, and we were also the first one to have this step up and step down mechanism for the interest rate. So a lot of traction and a lot of interest for all these this topic. Next. So here, I just wanted to recap also what are we doing in terms of SD, sustainability activity. And you know the name of our program here is SeaChange. You have the 4 pillars here on the top left. The first one would be on the label. The next one would be on the sourcing, then operations, and also people and communities. And for each of these pillars, we have a specific action plan to lead on this one. There is one thing to have in mind for you, which is on the climate change. And you know, climate change, so far we didn't have any targets. So we will share in Q2 22 what is our target in terms of climate change. And you know, there is some ambitions to move to limit the increase of temperature around the world to 1.5 or to 2 degrees. So we will announce in Q2 what is our ambition. Here it will cover scope 1, 2, and 3. Okay, so we are working very hard on this one, and also it will be some science-based target. So it's a new commitment for TU. We have been working on this one over the last few months. Apart from this one, we still maintain our commitment regarding sustainable packaging, moving to reusable, recyclable, or compostable by 2025. We have also our commitment on the tuna commitment, where we want to move to something which is really sustainable and where we are sure about the practices to prevent any IUU, fishing and slavery. Aquaculture, biodiversity, I don't talk about this one. This one, we have the same commitment that before. The last one is on the waste food. We want to decrease our food loss by 50% by 2025 compared to 21. So all of these, I think, are very important KPI for us. We have a lot of discussion with the NGO. Also on this one, you can see also on the top right, one news which came recently, which is a partnership with SFP. So SFP means Sustainable Fisheries Partnership. So they will help us. So it's a US non-profit organization. They will help us to move to more sustainable sourcing. Okay, you know, we have been under pressure on this one, and now we are leading really the whole industry in this path. I think we have no choice. If we want to avoid some scarcity in the resource, we need to make sure that all our sourcing is coming from sustainable procurement. Okay, so very important. We continue to be still very active also in this area. Next. So just to remind you, the guidance we've been sharing in our Q4 earnings release. So we maintain the guidance. There is no change. So for you to have in mind, the sales, we are targeting a top line growth between 4 to 5% compared to 21, which was record high. Keep in mind this one, please. So we still want to deliver more growth in 22. In terms of gross profit margin, we did achieve 18.2 in 21, so we want to remain in this same range between 18 to 18.5. And Lina did show you the picture of the last few years. I think it is really one of the key success of Thai Union over the last few years, moving to this 13, 14, very low gross profit margin level to 16%, and then now to 18.5% range. You know, the ambition for us is to try to move to 20% by 2025. Okay, the SG&A will still be very high in 22. Same situation that in last year. You know, we are still impacted by the crisis regarding the logistic cost. There is no real improvement. Honestly, it's a bit difficult to understand for our industries why it is so long to normalize. I think at the beginning everyone could understand that after the COVID wave, there will be some challenges, and you have some driver shortage in some countries like in the US, also in the UK, and the lead time is also much more longer from Thailand to the US or to Europe. And you know, of course, it's an impact. It's penalizing in our business because we do export the vast majority of our business. So SG&A to sales will remain very high also in 2022. We want to invest more also in terms of marketing activities. You know, we have some new activity, especially in the supplement business. So this is the first full year for our supplement business. So there will be some more marketing activities happening in 2022. The interest rates, we don't expect to have any significant change compared to 21. Capex is stand at 6 billion baht. So this is very high number. I think over the last 2 years, we are always between 3.5 to 4 billion baht. Different things behind this number. I think first of all, we have some very large projects. Just to give you some examples, we have a new protein factory being built right now in Thailand. The factory will be producing some protein, some collagen, also, which will be for our core business and also our supplement business. The commissioning is planned to happen in Q4 this year, so we don't expect a lot of impact from this new business in 22, but it will mostly come in 23. This project alone is 1 billion baht, 900 to 1 billion baht, which were invested partly in 21 and also in 22. Just to give you another example, we are building another factory still in Thailand, a culinary factory, where we are consolidating 3 existing factories, which were a bit old. And here we want to build a brand new facility in Thailand. We want to move to much more automation compared to what we had before. Again, another very large investment, around 1 billion baht just for this factory alone. So these 2 projects, and we have many more, is 2 billion baht. 2 billion baht is not an impact for 22. It was mixed and it was spread over 21 and 22, but the majority of the spending will happen in 22. Keep in mind also that over the last 2 years, in terms of capex, we have been always below our expectation. Why? Because the COVID-19, of course, sometimes we had to close our factories, or the technician people, they were not able to move and to visit the factories, so we had some delay. Okay, we had a very ambitious plan to move to more automation, and we have a bit of delay on this plan. We want to catch up in 22. So the assumption here is we will be working kind of under normal operations. We will not have any more shutdown from the factories, and we will be able to travel again. Okay, if it is the case, and so far, after 3 months already in 22, it's almost the case almost everywhere, and you can see all the measures, the COVID-19 prevention measures are really relaxing everywhere. But we want to spend a lot of money in 22, also to show the trust of the management. But we do believe we have to invest right now because the business is doing good, in order to improve and to perform even better in the future. Dividend policy, I think there is no change. We have been applying this policy since quite a while. So we are targeting to still pay 50% dividend payout ratio. I'm sure you know that 21 we have been decided to pay the record high dividend, and it was approved yesterday during the AGM. So very happy about this one, and very happy to be able to get back to our shareholders also some of the growth we have been enjoying so far. So guidance is unchanged compared to our communication in Q4. And next, I think we are done, no, Lina? Yeah, I think we can move to the next part, Lina. Go ahead.
Yeah, okay, thanks, Ludo, for the presentation. Now, please allow us to open the floor for any questions you may have. Please feel free to submit them in the chat box here, or you may unmute your microphone. Okay.
Maybe I can start, Lina. I can start just on another news. I talked to you about the news from today on Kelly's resignation from Red Lobster, and I'm sure you will have some question on this one. We can get back on this one. Maybe I want to get back also, and sorry, we don't have a specific slide on this one. There was a news also in Thailand on Friday from the SEC regarding some potential conflict of interest and insider trading activities impacting some of our directors and also some people being connected to our people. And I think here maybe the message for you is to have a look at the video we did on the AGM yesterday. Khun Rapong answers specifically on these points. So if you want to understand what has happened and how are we reacting, the investigations are still going on that. So we cannot talk because of course we don't have all the conclusion, and we don't have, especially from the SEC, all the elements on this one. However, there has been this communication. Now we believe it's a personal matter for all these people. We have been doing also some investigations on our side and did not find anything wrong. Okay, and I think the message from Tirapong was to say the quarter we are talking about was Q3 2017. So it was 4 or 5 years ago. And there was nothing really specific happening during this quarter in terms of business side. I think we were declining a bit in terms of sales and in terms of OP, but the net profit has been improving a bit compared to the year before at that time. But the share price at that time was low, and this is why we do believe that these people took advantage to reinvest, to acquire some new shares on this one. Okay, so just to explain you and to give you some a bit of meat around this one, we need to look at the next development on this one. So we are discussing with the SEC and also with all these people on how can we move forward on that direction. But so far, no impact is expected in our business. We need to see because, and I'm sure you have seen the press release, there are some sanctions which were announced to the people. So depending if the people accept or refuse, there could be some impact in their specific position. But so far, they continue in their current position, and the investigation, the procedure will just continue. Lina, any questions we may have?
Yeah, we have a question from Khun Chatri from Kianakin Patara. What is your expectation of the tuna price trend in April and for the rest of this year? And the second question is, what impact do we expect from the higher raw material costs on our margins?
Yeah, I think it's a good question. I think we have seen over the last 2 months an increase in the share price. Lina, I don't remember if we have one specific slide to show that or not, but the share price has been increasing. Okay, there is no surprise. You have seen the fuel price has been increasing. One of the reasons is, of course, the war between Ukraine and Russia that was completely unpredictable. So the fish price has been increasing. Right now we are around the 1900. Okay, 1900 is high, and this has been increasing over the last 2 years, over the last 2 months. So we need to clearly watch out on this one. I think the impact on our business, it will depend, and we do expect this one to be not to stay at this position. We do expect some decline to happen after a few months, but it will remain a bit high over the next few months. This is the expectation, and then after it will kind of normalize. It will be higher compared to the initial guidance. Lina, we gave a guidance of 14-15, no, I guess, for the year 2022. Okay, so that's what the guidance we gave for 22. It was before the war between Russia and Ukraine. Very clearly, we do believe the average price would be higher during the year because of these tensions around the fuel. You know, the fuel is the first source of cost for the fishermen. Okay, so compared to our budget and initial assumption, it will be higher, of course. So one of the topic we have to do, we need to negotiate some price increase. Plus, we need also to be creative in our supply chain to try to improve our operation to offset part of this inflation. Of course, it's a very challenging. The issue we are facing is this is coming also during a period where we are facing some very large inflation on the packaging and also on the ingredients. We have been negotiating in Q1 for our branded business some price increase, which are much higher compared to usual. And I'm sure you have seen in the news a lot of newspaper regarding inflation, very high inflation, especially in the food products, and impacting the US, Europe, and also the whole world on this one. So clearly, and I told you in Q4, if we are facing on top of this packaging and ingredient inflation and labor costs also inflation, if on top of this we have some fish price, it will become challenging. So right now we have some inflation coming. Keep in mind that we have some large inventories of fish. Okay, so we have something like 6 months of fish inventories in our Thailand operations. So it will help us to absorb and to offset part of this inflation. It's a bit lower in Europe and the US. Okay, in Europe and the US, we have more finished goods inventories, but less fish inventories. So different business model between the two. Now the question is, how long will it last? If we say it's only 1 month, or do we stay at 1900? Then we can manage. If we say no, we go above the 2000. Then it would become really an issue and a really big challenge because it will come up on top of all the different inflations I was mentioning about. So the second question here is, what is the impact we do expect on our material cost? Of course, it is increasing, and we have seen that over the last 2 months. So it's additional pressure for us on our margin. Okay, so it is a challenge for us very clearly, especially for our branded business, because we have been negotiating the prices already for 22. It means that you will have to get back to our customers and retailers. This is not new. We know that. We know how to manage this kind of situation. However, this year, I think the inflation rate is very high on that. So this kind of unusual situation, and the magnitude of the inflation is much bigger than compared to usual. Okay, this is one of the issue. There is one good thing, which is we are not the only industry facing this situation. And I'm sure you have seen all the food companies communicating on this inflation and saying, sorry, we need to have some tariff increase. And I think that was helpful for us, because sometimes, some years, we go to our retailers to get some price increase and we are the only one, meaning there is almost no inflation for the others. Here, the good thing is everyone went back to the retailers and claiming from price increase. So this is what happened, and I think we were quite happy with the output in Q1. However, we may have to get back again to the retailers, and we can always claim for this force majeure clause where you say, okay, sorry, the prices are going so high that we need to discuss again, even if sometimes the agreement is valid for 1 year. Okay, so it means for us additional pressure, challenges, but okay, we do believe we have the strengths. It could be some impact for us in our gross profit margin in the short term. You could imagine seeing some decline in our gross profit margin because sometimes we have a lead time, and usually we say we have 2-3 months lead time, especially for OEM business, in order to be able to renegotiate again with the retailers and blah, blah, blah. So in the short term, we could have some impact in our gross profit margin. However, at this stage, we still maintain our gross profit margin assumption for the whole year, and we'll have to see the development of the fish price over the next months. Lina?
Okay, Ludo. There's a question from Kun Maria on the Russia-Ukraine exposure. So can you please describe how the war is affecting the tuna fisheries, as the location of our plants are not that close?
So here, in terms of direct impact, I think the question is absolutely valid. There is limited direct impact. We don't sell a lot in these countries. We don't import a lot from these countries, both in Russia and in Ukraine. You know that we don't have a specific OpCo operating in Ukraine. We have some few customers, and we are selling from Thailand and also from Europe to these customers. Of course, the situation of war that we do deeply regret, and we do expect the normalization to happen very quickly. We continue to have some operation there. Of course, it's more difficult from a supply chain point of view, from a financing point of view, but we still have some operation. But honestly, it's very small. We have one company operating in Russia, mostly doing some ambient business. And before, they were focusing a lot on importing some products. And of course, they have been switching, and now they are doing much more local fish. So it's a challenge. We are continuing our operation there. It's very small. Honestly, for the whole TU, it's less than 1% of our top line. But the decision was to maintain our operation there. I think we do believe what we are selling, of course, it's food. We need to feed the people, okay? But at this stage, I would say overall, very marginal impact coming from that. We could have some impact because we're importing in the US some of our fish and raw materials from Russia, but honestly, it is super small. Okay, so we don't expect any direct impact. There will be some indirect impact, and of course, this is one of the explanations from the very high inflation. And I'm sure you have seen that Ukraine was one of the first country to produce the sunflower oil that we are using quite a bit in our ambient business. So the fact that now their operations are impacted is of course not a good news. Okay, it's one additional factor coming and explaining the very high inflation. We did not need this war. Again, we really regret, and we do expect that it will find a solution very quickly on that one. Just also to show we have been doing a lot of donation in this country to try to support the communities there.
Thanks, Ludo. Maybe just a follow-up question on that is, in the notes to financial statement, there is exposure to the Russian ruble. Is that material for the first quarter? And what about the financial sanctions?
Honestly, I think given the size is super small, so you cannot expect anything material. Yes, there is some impact in the local business in Russia, and the ruble has been depreciating a lot since the beginning of the year. It's an issue for the local business, but honestly, it's so small, so you will not see any impact in our numbers. Of course, the local business, they have to do some price increase in order to absorb all this one. In terms of financial sanction, of course, it creates some issues, more difficulties to transfer some money from one country to another country. Plus, you have seen also that very difficult to use euro and USD on this one, so we are using ruble. It's not a big topic for us, but it creates some complexity. Yes, definitely creates some complexity on this one. Now, in terms of numbers, I think you don't need to expect anything big because our operations are too tiny in Russia.
Okay, another question from Kun Chatri. Has there been any additional demand for ambient products in the European countries, especially in those countries near the Ukraine, as a result of the war?
Yes, we have seen an increase, especially in Poland, in Ukraine also. We will be benefiting from this one. Will it be large or not? I don't know yet. I think it's a bit too early to mention that, but yes, we have seen some increase of our business in Poland and also in Ukraine. Of course, we are very careful, especially for the sales in Ukraine, because all the credit insurance, of course, they are using this situation of war to say, okay, because of this war situation, we don't, the credit insurance policy does not work anymore. So you need to be much more careful. So you have some two decisions to be made to say, do you take the risk 100%? Of course, you can work with prepayment for 30, 40, 50%, but you are still at risk. So here we have some business decisions. We have here some customers who have been working for years, and we want to continue to maintain the relationship. But of course, the logistics is much more complicated, and the financing is also more complicated. So yes, we have seen some impact in these countries. Not huge. I don't expect some huge number, but locally, yes, and regionally, for the countries around Ukraine, we have seen some increase in the ambient demand. Correct.
Okay. And another question is, if you cannot buy soy oil from Russia, then where else can you buy it from?
I think we were buying before from Russia. We have also some other sources. For the soybean, Russia is a significant one in the business. Ukraine was another one, but you have also some from other countries from Europe. You have some also from Asia. One thing we are also doing is we are trying to shift some of our specificities, because soy oil is one of them, but you have also sunflower and some others. So we are trying to change the specificities for our product to try to decrease our exposure to these very exposed ingredients. We know there will be some difficulties, and the difficulty will not be only for the short term, so we have to do these changes. So the two key impacts are really, first of all, trying to adapt our specificities and to remove all these ingredients which are really now under tension. Second action is, of course, on the supply chain to find some new procurement sources. And I think now we have some global operations, so we can always find some of the suppliers, even if sometimes from a volume point of view, it's tricky. And the third one is for the customers which are willing to keep soy oil or sunflower oil also in their products. We need to negotiate some price increase. And honestly, we have seen that the pressure is so high that we have some constructive discussions around this one.
Okay, moving on to Red Lobster. So for Red Lobster, the high season of, the first half of the year is coming. For example, Easter holidays and, Lent Day and other holidays. So what are the expectations of our management team on this year's high season?
So I think you're absolutely correct. Usually Q1 is the highest for Red Lobster in terms of seasonality, and they are always making a lot of profit. I think the situation will be different this quarter. Why? Because we have been facing really at the beginning of the year, end of 21, beginning of 22 with the Omicron variant. And because of this one, we could see very clearly a strong impact in terms of guest count. The guest count in the US has been a problem because people were just scared of going back to the restaurants. And I think in Q3 and Q4 last year, the traction was very good. The guest count was good. People were getting back to the restaurants. And here, this new wave of Omicron in the US was really bad on that. So it did penalize us. And I think we did communicate on this one. And this is already captured in our guidance of 400 million baht that we have for the full year. So we have this one. There were a lot of very bad weather conditions also in the US. We had to close some of our restaurants. Plus also, of course, Red Lobster is facing this huge inflation. I think the whole restaurant industry in the US is facing this situation of inflation. But if you look at the products that Red Lobster is selling, these are some of the key products which are the most impacted by the inflation. Lobster, for instance, is one of the key products we are selling at Red Lobster. And this is one which was the most penalized by the inflation over the last few months and year. And the last challenging point I think will be on the labor costs and labor recruitment. We told you that after 2020 we had to do a lot of redundancy, so we decreased really the number of people. Now the challenge in 21 and 22 is to have more people in our restaurants. We need to have more managers. We need to have more staff. So when the people get back to the restaurant, they are very pleased with the experience. Because of course, for us, the worst case situation will be the customers getting back to our restaurants, and for any reason, the execution is not good and they are served with delay, or the food is not good and blah, blah, blah. And then they just decide not to come anymore in the future. So very important for us to invest. Of course, we know that in the short term, it will hurt us in terms of profitability at Red Lobster, but we do believe this is really the right choice on this one. Okay, so I don't expect, just in a nutshell, we don't expect Q1 to be so good for Red Lobster. I think the situation will be very different compared to the previous years on this one. But in the long term, we do believe that we can turn around the picture. We have some very nice initiative which are currently ongoing. We mentioned from the beginning, it will take a few years for us to completely turn around Red Lobster. We were not expecting this new wave of Omicron to happen. Okay, it's a surprise. It's a new challenge, not only for us, but for the whole restaurant industries. And we are confident the team will be able to cope with that one.
Okay, on the tuna price, so the highest price was at around, 2,300 US dollars per ton level. And at this level, there was no force majeure. So under the current situation, what is the level, the price level where we can declare, force majeure and renegotiate the terms ahead of schedule?
So I think here we have different views depending on which business are we talking about. OEM, of course, is not impacted at all, but they can always get back to the customers and claim for price increase. You don't have this kind of yearly agreement for the OEM business. So OEM business is completely separated. It will take sometimes a few months for us to negotiate some price increase when we are facing some inflation, but overall we can manage. So here I think the question is really related to the branded business. And in the branded business, depending on the countries, again, we have a very different situation. In my home country, like France, we have some yearly price agreement. Okay, some other countries in Europe, like the UK, we have some quarterly agreements. So you can always get back in a much more easy way to the retailers, the customers, to negotiate some price increase. Now, if we talk about France or Italy, for instance, where we have this kind of yearly agreement, there is no specific threshold, okay, to decide if you are in force majeure. So it's a bit subjective. I agree with you. But here you can always try and get back. I think there is one thing which is helpful for us, which is all the proteins and all the food industries are facing with this inflation. And you could see also a lot of in the newspapers, some communication being made by the retailers also, and saying, sorry guys, the conditions are so unique that we have to do some price increase, and also requesting from the support coming from the government in the different countries. So here on this one, just to answer to your question, Maria, specifically, there is no specific threshold on this one. but we can always get back to the retailers. Of course, they will push back. And again, right now at this stage, it's too early. With the fish price at 1900, we cannot say anything. It will depend where does it go if we continue to grow and how long does it last. Okay, but right now it's a bit too early to get back to retailers, but very likely we may have to do that in the future.
Okay. So for Europe, generally this was a more difficult market to raise prices and pass on the cost. Will this continue to be the case? And is it currently?
It is still the case, very clearly, and I think you're absolutely correct on this one, Kunchartsi. Over the past few years, the average price increase we get was always between +1% to +2% net. Okay, so very limited. I think this year we were claiming from, depending on the countries, between +5 or 7%. And of course, we never get exactly what you request, but I think we have been quite happy. So it's the inflation we could negotiate was above the 1 to 2%. Will it be sufficient to cover all the inflation at this stage? To be too early? It seems to be likely that we need to do some more to be able to absorb all the inflation. Okay, keep in mind we have two key levers, especially for our branded business in Europe. First one is price increase or decrease if the raw material price is going down. The second one is on the promotion intensity. In our branded business, we are doing a lot of promotions, and you can decide to increase or decrease the promotion intensity in order to try to save your GP, because of course, when you are doing some promotion activity, it will help you on your volumes, but it will hurt in terms of gross profit margin. So it's always a trade-off between the two on that. So here, I think the feedback for Europe is overall for this year 22, the price increase we could negotiate with the retailers were higher compared to historical data. That's good. Will it be enough? I think there will be some challenges. We'll have to do something more. Okay. And what does it mean? It means trying to negotiate more price increase or trying to work again on our operations to move to more automation and to cut some cost, and to work also again on the specificities on our product to try to remove all these expensive ingredients, to discuss also and to educate our customers. Okay, they need to understand that we are facing kind of a unique situation for some very specific ingredients, like sunflower, like sunflower oil, like the soy oil also. So it's also in their interest to try to move away from that. Okay, let's see in the next month how is it doing.
Okay.
Lina?
Yeah, if there are any further questions, please feel free to unmute your microphone or submit your questions in the chat box. We have just a few minutes left. Okay, I guess if no further questions, then maybe, okay. Can you please give us an update on Avanti?
So Avanti Feed, it's of course a listed company. In India, of course, we have very strict rule that they cannot share with any forecast. So basically, I have the kind of the same information that you do have if you look at their communication, their financial statements. And I'm sure you know that the year 2021 was difficult for Avanti. They have been facing two key issues. The first one is they have been facing with a very large recall in the US, and all of this is public information. So it has been, of course, impacting their operations in the US. And the second point is they have been facing with shortage of labor in India, mostly coming from the COVID-19. I think on the first part, the recall is over now. I think they almost don't have any more impact, and the situation is then normalizing on this one. On the labor shortage, I think the situation also has improved. And I went to India. It's kind of funny last week on this one. COVID situation is quite good. Overall, on that, they are not facing with the same issue. So we do expect to see in the year 22 some recovery regarding Avanti compared to the year 2021. Okay. However, the feed business overall and our own feed business is also facing these issues of inflation. And I'm sure you have seen the TFM, our TFM numbers for the Q4 2021, which were not good. On this one, we're not happy with this one, but clearly the feed business overall is under pressure with a very high inflation coming from specifically some of the ingredients. So we need to see how they're coping with this inflation on that one. But at least the two specific one-off we had to face last year the recall and also the shortage of labor cost, I think the situation is really normalizing on that one. So we do expect some improvement to happen in the full year 22. Will it be already effective in Q1? It's a bit too early to mention on this one, but over the full year, definitely we do expect some improvement compared to the year 21.
Okay. We had another question coming in. Investor would like to know if, you know, in terms of, you know, CG policy or control, does it does it cover also the spouse?
Yes, it does. So we have some very strict rules on this one. Some, I think, it the spouse and also all your children, if you have any children. So we have some rules which are ongoing. Clearly, since 17, I think the level of the corporate governance has been improving. And it's always a question of education. You always need to remind all these people which are the rules, to explain why are we doing this. So clearly the situation and the bar of the quality has been really improving over the last few years. Maybe it was not enough because you have seen these issues that we had to face, which were related to 2017. But yes, we have some clear rules on that.
Okay. Maybe just going back to a question from Kun Anek Pong. Is it a profitable quarter for Red Lobster, or is the impact from the cost as well as COVID making it a loss in Q1?
So here what we can say, I think, is Red Lobster, usually we have quite a significant gain and profit. In Q1, it will not be the case. I think it's quite likely they would generate a loss in the Q1 22. I think it's a typo in the question. I think the question is for Q1 22. We do expect to have a small loss coming from them, or slightly positive, but more likely it will be a small loss coming from them. Yes.
Okay. For our metal sourcing, so where do we source our hot rolled coil steel from? As you know, the Thai government might impose some anti-dumping taxes on these steels, on these steels in May. So what is your plan to mitigate the impact?
So first question here on this sourcing, we are sourcing from different countries, mostly from China. You know, our packaging business is mostly in Thailand. So we are sourcing from different countries, China, and some other countries in Asia. And also a bit from the overseas on this one. Yes, we have seen the anti-dumping tax on this one. At this stage, it's a bit too early to assess what could be the impact. Let's see on that. The team is working on that right now, and of course, we may have to change a bit the sourcing of this product to try to avoid this anti-dumping tax. One of the issue we are facing is, of course, you have seen that since last year, this business, the steel and also the aluminium, is really under pressure from the inflation. So different topics on this one, but honestly, if you look at the track record of our business over the last 2-3 years, it's not the first time we are facing with this kind of situation. Until now, we have always been able to manage quite well, I think, this kind of situation. So inflation plus also the anti-dumping are well in our agenda. For the timing, it's a bit too early to say what could be the impact on this one, but I'm quite confident we can cope with these two impacts.
Okay. Then one question from people. So the net impact from inflation is negative, right?
So if it's a question of our bottom line, of course, yes. It's a pressure for us from on our gross profit margin. I think you have different topics. Okay, there is a first topic which was existing since last year, which is logistic issue. Okay, and you have seen this one. The situation was not good. We were expecting the situation to normalize. It was not good. So clearly, we had to increase our price just to face with the logistic issues. And in Q4, you have seen the situation was not improving, and I don't expect the situation also to improve in Q1 22. Then on top of this, you had since Q3, Q4 last year, some inflation coming from the packaging, coming from the ingredients. Okay, this we knew it in Q3, Q4, so you try to get some price increase on that. And then now you have a new one, which is a bit more recent on the fish price. Again, we need to see how long it will last. But clearly, right now, the fish price over the last few months has been above our expectations. So again, you try to get to do some price increase or to work on your operations to try to offset the impact. So all of this, you are correct. And labor cost, we didn't talk about labor cost, but there is some pressure because of all this increase of the cost everywhere, you have some pressure on the labor cost. So all, of course, of these triggers some pressure on our gross profit margin. Of course, it is good for our top line because the value of your product is more expensive, so it's good for the top line. But at one stage, you have also a price elasticity. And if at the end of the day, the price to the retailers reach a certain level, we will lose some volumes. Okay, again, we are not the only one because all the food companies are increasing their prices right now. And just the fact that everyone will pay, we have to pay a bit more in 22 just to get some food on this one. But yes, very clearly net negative impact from the inflation on our profitability. Okay, and the two KPI here that you need to look at is really the gross profit margin and the OP margin. But it will be a positive impact for us in terms of revenue as long as the volumes are not impacted. And I do believe that there will be kind of a mixed situation in 2022 where we will see this very positive price impact in our revenue, but also the volumes being a bit under pressure. Lina?
Yeah. So I think any last few questions before we end this session? If not, then maybe Ludo, would you like to give a few words before we end the CFO call for today?
Sure. Thanks a lot, Lina. Just in a few words. So I think what we have been sharing in Q4, we gave you some numbers. And again, we are comparing to a 2021 baseline, which is very high. We want to grow further compared to this one. Okay. Of course, there was a very significant change after our budget time, which was the war between Russia and Ukraine. Okay. And definitely this change will bring us a lot of risk and challenges. We're getting additional inflation coming from a situation which was already very complicated before. So a lot of challenges ahead of us. However, in each crisis, you can have also some opportunities. And we could also have some opportunities in this crisis. This is why overall, we maintain our guidance for the year 22. Of course, we need to see the fish price very carefully, the change over the next few months, and we do expect to have some kind of normalization. So right now it's a bit like last year when we told you we have a lot of uncertainty and clarity. There are a lot of risk, but also opportunities on this one. I think we are kind of the same situation with a mixed feeling, with a lot of risk reported by all our operations everywhere, but also some opportunities. So I hope that now with this 1 hour discussion, you have a much better view on our business and how do we plan to face with these challenges. Lina?
Okay, thank you, Ludo. So I think that concludes our CFO call for today. Thank you, Ludo, for the presentation and Q&A, and thank you all for joining us today. If you have any further questions, please feel free to contact the IR department. We hope to see you next month for our financial results.
Thanks to everyone.
Yes.
Stay safe.
Bye-bye.
Bye-bye.
Thank you to you.
Bye-bye. Cheers.
Thank you. Bye.
Thank you so much.
Thank you.